Is China taking a page from Trump's playbook? What's up, everybody? Welcome aboard Bubba's Bottom Line. Always great to be here with you over the weekend and kind of discuss what happened last week. And of course, over the weekend, it looks like China is walking away from the table. They're no longer interested in trade. And so the question is, are they taking a page from the Donald Trump playbook and trying to muscle up? Very possible. Again, one of the differences is Xi has got the opportunity, since he is the dictator for life. He can afford to hold out, but I think that what he's going to find out is it could cause a great deal of more problems within China. Not that they actually care about their people, but it could create a whole bunch more problems there. I think Trump is 100% correct on this whole trade war deal that's going on. As I've said before, I don't think it means anything. And of course, the equity markets continue to tell you that it doesn't mean anything. And I think that is really more of what we're starting to see here with the overall trade wars. I think that they are going to resolve. I think it only makes good sense. I think when you look at the overall picture of these markets, the U.S. is flourishing and the rest of the globe is really starting to struggle, including the emerging markets and other places, and that's going to create a much bigger deal. So I think when it's all said and done, I think that all China's doing right now is trying to muscle up. But at the end, one thing we know for sure, the United States of America can be self-sufficient and doesn't necessarily have to trade with anything. Yes, it might raise some costs here, especially now when we look at what's going on with our job picture. You know, now that we have an overabundance of jobs, and whether they be good jobs or bad jobs, what we do know is people and companies are going to have to start to pay more because if they want to attract employees. Almost everywhere you go now, there are help wanted signs, which is just telling us that there is plenty of jobs available. Shockingly enough, last night I went to a restaurant that happens to be in a mall, and it's the first time that I saw a crowd in this mall. So what does it all mean? Is the economy improving? Is it getting better? And certainly the appearance of the economy is getting much better. Certainly people are now working again, and we've got obviously a very low unemployment rate, and the participation rate is shrinking as well. So I think when you look at it, indeed, we Americans are falling into the trap that we always fall into, which is once we see the light at the end of the tunnel, once we see the ability to potentially make money and make a living, we start spending. Because at the end of the day, okay, say what you will, we are a by-the-month society. We are whatever I can afford to pay by the month. I don't look past anything except if I can afford it by the month, I'm in. And of course, that's one of the reasons we have this massive credit card debt. This is one of the reasons we have this massive debt bomb that will eventually explode. Now, again, we have said repeatedly that we are not interested in shorting this market yet, as we saw new highs coming. So again, we are not telling you that the markets cannot go higher. I am saying to you that there are many warning signs out here. We look at the raging consumer confidence. Okay, now that's a great thing to have, but we've gone from the raging confidence to raging complacency, because again, when people are overspending, and this is very typical, you know, listen, it trickles down from the government all the way down. Okay, the government spends more than they have. Okay, and so do most people. So what happens is we end up in debt, and then something changes and we end up with a mess. And of course, that's what we would expect, is that something to change that will create a bigger problem here. You know, again, always the question is what creates a bubble, okay? Well, I think that this market here, you know, if we go back to 1980 when Alan Greenspan took over the Federal Reserve, he is, I note him as the top bubble builder in history. And he's gotten a lot of help from his underlings. And of course, it went from Greenspan to Bernanke to Yellen, who wants to create even a bigger bubble. And of course, now Powell. Their manipulation of rates, their manipulation of currency, and their accumulation of just more debt. Again, you cannot borrow your way out of debt. Okay, many have tried and failed. So at some point, there's going to be another slowdown for whatever reason that happens to be. Something is going to change. Okay, so when you look at what the bubble that we have here, we've got stocks going straight up to the moon. Okay, now we've had, since the big sell-off in January, now all 4 major indices have now made new highs. Okay, now you saw a lot of weakness last week in the Russell at the end of the week. We had a big rebalancing on Friday in the indexes, but at the end, again, you have valuations that many will say are not too high. I say that they're ridiculous. Again, we're basing everything on very, very cheap money. Well, what have we seen recently is the 10-year is now comfortably over 3%, not just flirting with 3%. And as we've talked about before, 3.5% to 4% is that area where it's going to start to create some real problems. For the stock market, because what's going to happen, we're getting to a point where you're going to start to see some money flow out of the markets, okay? And not because they're worried about the market, but there are many people that are participating in these markets that wish they weren't. And they'd be very happy to take 3.5% or 4% in a passbook savings account or a CD and not be involved in the market. So that's number one. Number two, each and every pundit expert keeps talking about how great the earnings are. And yes, they are great. But what do we know? We know that they're going to have to start paying more to their employees. They're going to have to start offering better benefits to their employees, which is going to take money right from the bottom line. So when I look at the overall picture and I look where we are and I say, okay, the cheap money, they're paying the underpayments that they're making, excuse me, all those things combined will create less profit. And that's saying that we are going to stay in these perfect conditions. Now, I'm not saying we can't. I don't know. But what I do know is that in history, we have never been able to stay in these conditions. And you're starting to see the whole business of this time is different again. It's amazing. I know we've talked about this last couple weeks, but as I listen to the experts and the pundits, of course, the pundits like it because it's great for ratings. Okay, it's great for TV ratings, which is great for ad dollars. And I have no problem with that. I mean, they're just doing their job, and that's, you know, again, obviously people like their good news. But the so-called advisors, experts, and brokers, they want you in the market again, because when you're invested, they're making commission, and when you're not invested, they're not making commission. So why not keep you in the equity market? But I think that the overall markets are what I would call is price for perfection. You know, you start to look when you trade long enough, you look at certain things that happen in markets, okay, and they get to certain levels, whether they be down or up. So in the equity markets, we're at that point where there is no bad news. The markets ignore, shrug off. They don't care about the massive amount of debt. They don't care about anything else that's going on. They don't care about the world problems. They don't care about the collapsing emerging markets. They don't care about collapsing China. Now, you know, in today's world, everything is kind of interlinked, and somebody's problems will flood over because of all the money that's out there and that we have loaned to these other countries. So when you start to think about it, will there be a contagion issue? I would say yes, there's going to be. What problems are going to come up? Well, there's going to be a lot of problems come up. I can't give you what the exact one will be today, but I am convinced that the banks are once again extremely over-leveraged. Okay, they have so much money out on the street, and again, it doesn't mean that it's showing on their books, but they've bought so many loans. They're willing to buy loans. Again, this goes back to the same thing we've seen in major collapses in the past. They're buying loans. They don't care. It doesn't matter how good they are. There's the requirement to get money either through the bank directly or through a third-party lender that will then sell that loan back to the bank has become nobody cares. Okay, so they're going to continue to do the same thing. So are we in a bubble? We're 100% in a bubble. Again, but that doesn't mean the bubble has to pop. You know, if you go back and look at bubbles in history, they can last years and years and years. If you look at the South Sea bubble, which is which was a shipping bubble that actually broke Sir Isaac Newton. Isaac Newton made a fortune in the original part of that deal. He got in, he got out, and was obviously, whatever the big terms are, let's say just a millionaire, okay? And then what happens is what's happening now, as far as I'm concerned, is he saw the opportunity and the greed took over from him and he got back in again. And of course, in history, you will find out that Sir Isaac Newton died a pauper, okay? Because of course the bubble did burst. And again, this is something that we're seeing, you know, when you watch these stocks go up in leaps and bounds. We saw recently this pot stock, Tilray, okay? Again, listen, it was a great trading vehicle, but when you watch the action in markets like this and they continue to just go in leaps and bounds, up and down, wild trade. And again, it's not just Tilray. You had some very wild trade in Amazon. You had some very wild trade in Apple. So Tesla, you know, eventually these bubbles do pop. And again, I'm not telling you when it's going to pop. If I knew, I promise I would tell. But I don't know when it's going to pop, but I do know that it will. And I do know that we see markets that are totally priced for perfection and nobody cares, okay? Nobody knows. There is no bad news. All you have is the cheerleaders that continue to say we can only go higher. And of course, we hear the same reasons why. Earnings, and again, earnings are good. Company growth is good. Everything is great right now, including consumer confidence. And we know when complacency takes over for real markets, okay, and everybody knows that the markets can never go down again, that's the time you should start to worry. If you remember the movie, The Firm, and Wilford Brimley says, I get paid to be suspicious when when there's nothing to be suspicious about. You should, and it doesn't mean you should uninvest from this market. Again, I'm a full believer and I'm 100% invested in the market. I'm hedged, but you should realize that what could start to happen and prepare accordingly. It does not mean sell out. It does not mean close your position. It says be aware of what may happen and prepare yourself so that you don't get stuck and dragged in emotionally, because that's what happens. We go from the greed, the fear of missing out phase to the puke phase, and it happened just like that. So again, all I'm saying is there is an event coming. It could be tomorrow. It could be a year from now. Who knows when it is? But mentally, you should be preparing yourself for that event and what you're going to do when it does come. This is Bubba's Bottom Line. Todd Bubba Horowitz. We're going to step out here for a break, and we'll be back with more of Bubba's Bottom Line. What's up, everybody? Hey, so remember, you know, we have our high school investing program, and of course, we're running out of capital, and it's going to be real close if we're going to be able to keep it going. If you'd like to help us out and continue to help us educate the youth of America, all you have to do is go to Patreon, patreon.com/Bubba Trading. That's patreon.com/Bubba Trading. And of course, don't forget to catch the Bubba Show each and every day at libertytalk.fm. And of course, don't forget we had the winning side, Cleveland Browns. We picked them right here on Bubba's Daily Update. In the meantime, let's get back to the show. Welcome back to Bubba's Bottom Line with Todd Bubba Horowitz. And of course, always great to be here with you. I hope you're having a great weekend. And, you know, as we look around the market, so we saw new highs last week, S&P, Dow, NASDAQ didn't make new highs, but NASDAQ has obviously continued, to make new highs. And of course, we've seen some problems kick in the last couple of days with the Russell under a little bit of pressure. But obviously, markets are still well up near their all-time highs. I think when you look back at last week, if you look at some of the different areas of what's going on, gold continues in this, it's a brutal consolidation pattern. And again, what is consolidation? It is the time of most uncertainty. And of course, you have a rally, and then the sellers come in, and then the dip, and the buyers come in. In the meantime, as you saw, Gold was making a nice little move and trying to get up towards the upper end of that 1220 range. And all of a sudden, bang, in came the sellers and took gold down at one time Friday morning about 16 bucks before closing down about 8. Just something to keep in mind on. I think that gold looks really good. I think it looks like it wants to go a lot higher. So I would continue to look for opportunities to buy on the dips. I think the more bullish of the metals right now would be silver, though. The gold to silver ratio at 85-1 is ridiculous. You know, the law at one point was it could be no more than 15-1. So I think that's a much better play. As we look at the oil markets, again, once again, we're in this pattern where we might have to puke out again. You know, we trade oil a lot, and of course we've had some great trades, but also some we had to really puke them out. And right now, just for today, I'll give you 73 would be our puke point if we have to get out. The thing that bothers me about the chart is the ascending pattern that it's in right now, but it is right against resistance. It should fail. The backwardation shows that it's more of a fear trade once again. But again, we're not going to get stubborn. We're not going to let it, you know, hurt us. We're going to do what we have to do. But right now, we're staying short and happily, but uncomfortable at the moment. The grains, as we said last Sunday, look for a big move up, and we got a nice move up. It took some time. You know, middle week, it was pretty ugly. You know, again, we have, it's not really the trade wars. Everybody wants to make it about the trade wars. But it's not the trade wars. It's just the common way of trading. You know, 10 days ago, we had what we call the WASD report, and it came in very bearish for grains. And you already had grains kind of on the limit. Now, if you look at the grain markets and you look at the equity markets, okay, we talk about the equities are priced for perfections. I don't know, to me, and I said this and wrote this last week, there is no more bad news that you can write into, you can put into the grain markets, okay? Other than wheat, which has been strong all along, but soybeans and corn, I couldn't find any more bad news. I don't know how much more bad news you could make to think that it would actually go lower. And of course, we finally had that final pukage on, I think it was Wednesday, pushed them down and then boom, and had a nice finish to the week, finishing higher on the week. Now, the most bullish right now, from a trading standpoint, would be soybeans. Soybeans had a outside week. On a weekly chart, they made new lows and they made new highs from the week before. So it's pretty bullish the way it closed. Again, and I think that the China pulling away from the table should already be priced in. I don't believe that will have effect on the grains. I think we look to see a very positive week, and I think we look for grains to continue to roll on. As they say at Alabama, roll tide. I think we roll tide in the grain markets here. Again, it will not be easy. There will be some fumbles and some interceptions, but in the meantime, I think we continue to see them push to the upside. The meats had a great week. Again, you know, they held those big gaps. If you remember, a week ago, 10 days ago Friday, they gapped up and basically closed up on limit on Friday, and we thought last week that they should probably sell off a little bit. Well, they were down a little bit for the week, but they didn't sell off. They really held that upper end, and it looks like they're starting to consolidate at a higher level, which indicates to me that there's a chance to blow higher. Now, you've got the cattle on feed was on Friday at 2 o'clock, and I think what you saw was a report that was bearish. It might catch a few by surprise, so you could see a little bit of selling, but I think that selling is going to be a buying opportunity in both fats and feeders in the cattle. And hogs broke through that 60 level, and I think now we've got an outside chance, and this is October, have a chance to go up to 70. I think you watch the 60 on the pullback and see what it looks like, but I think we're now safe. You know, if you remember the marathon, man, you know, Sir Laurence Olivier and Dustin Hoffman, is it safe? I think it's safe now. Again, don't get me wrong, there could be some selling, but you have to find the right entry and the right levels to get in. I think that this is something that we have to look at. And so I think overall, Bitcoin in the cryptocurrency world is moving nicely and has made higher lows and is now trading higher again. It looks to go back through that 7,000, but the other ones, Ethereum and the others, are looking as solid as well. So I think that markets are starting to look good, and I think they're going to be better. So last is, and the equities or in the markets, is the bond markets, and the bonds took a big hit last week, again pushing interest rates higher. You've got a big danger of the inversion of the yield curve. which, you know, everybody says it doesn't matter. It's different this time. I know. Okay, well, I say it ain't different. Okay, that's my opinion. And it doesn't mean, again, nothing means that you have to act immediately. What it means is there are more problems lurking. There are more landmines in the ground. Okay, and I think that's something that is a problem. But as we look at some of the general stories of the weekend, of course, Cornell University or college, whatever it is, again, you know, you pay $500,000 for an education to find out if you're privileged or you're oppressed. Are you kidding me? This is what their orientation is now, is that they're going to tell you whether you're privileged or you're oppressed. You know, to me, again, we're getting into a very murky area. And of course, the left is trying to take over the world. And you've got a lot of these things going on. And of course, a lot of these big studies, you know, are coming out of these universities. And of course, I think that you've got some serious issues here. You know, you've got the educators trying to reverse the world, reverse the free market system, reverse the smaller government. There's just a whole bunch of things, but I found it interesting that Cornell is going to tell me whether I'm oppressed or not. Of course, I couldn't get into Cornell, but that's always a story. But I mean, you know, you do have, as we've talked about for months here, a storm in the treasuries. You could see that, you know, as I said from the beginning, and I go back a couple of years, saying that I don't care what the Fed does, okay? The Fed is a bunch of people that have no common sense, that only know how to live in that glass tower. They're all academia, and there's nothing wrong with that, but in life, you have to be able to adjust and do something using some common sense, which they have none, okay? Now, Powell might, I don't have a true read on him yet. He might have some common sense, but one thing I do know is rates should have been going up all along. They have not. But at the end of the day, okay, you've got some issues, and the bond traders, you know, the bond market, it's called the fixed income market. That is the biggest market in the world by at least 10 to 15 to 20 times over any other market, okay? So they do have the bullets to take on the Federal Reserve, so to speak, and they can force the Fed's hand, and I think that's what you're starting to see. That's also helping with the inversion of the yield curve and all these other things, because those markets are very controlling and very telling. So as we continue to look at those markets, they look like the bond futures want to go lower, which means that interest rates are going to go higher. You know, this zero to negative rates to very low rates throughout the country is not healthy for anybody. It does not give you a true picture. It just shows you how the Fed has destroyed the dollar and destroyed your wealth over the last 105 years, and will continue to do so if we allow them. And of course, that's one of the reasons that the Fed should either be ended, because they are nowhere near on the path of what they're supposed to be, or they need to be audited, because there needs to be more control. They have too much power right now to make up too much money and allow too many things to go on, which then allows the banks, okay, which allows the banks to print money, which allows them to get into trouble. Why? Because they know that the Federal Reserve will be there to pat them on the butt and say, hey, it's okay, we'll just give you money and print you money once again. So I think that's another issue, okay? Now, one of the big issues that we're also starting to see, and I really want to see the fallout from this. You know, Illinois, one of the worst states in the union, that's where I am, but it fits in with, you know, many of the high-tech states, Connecticut, California, New York. Well, there are corporations that are leaving Illinois to go to Indiana, and it's not that far. I mean, believe it or not, where I live 40 minutes from Indiana and 20 minutes from Wisconsin. But at the end of the day, okay, you're going to see this exodus, and corporations are going to say it. We're not paying these taxes, okay? And it's not only for them, but for their employees. This is going to be a problem, okay? Think it or not, it's going to be a problem, okay? I think that, again, we talk about the middle-class retirement nightmare, okay? This goes back to interest rates and everything else. But hopefully that'll start to churn, and hopefully they will not get trapped again when this market starts to fall apart and collapse, okay? So, again, there's a lot of things. Look, it's great the economy is going good. I'm happy, Okay, it's great people are making money again. I'm happy. I wish they'd learn to save a little bit more. I wish they'd learn to be a little bit more disciplined about it. But it's great that things are going up. But now is the next big test. Can we get the employers to actually get wages higher? Because there's now, supply demand. There's too many jobs, not enough people, so you got to pay to attract them. We're going to step out here for break. This is Bubba's Bottom Line. We'll be back with my commentary after the break on Bubba's Bottom Line. Hey everybody, what's going on? Remember, we picked Cleveland last week. We will have a selection for you tonight as well. But in the meantime, I want to remind you about our high school investing program. We've been running this program for 9 years and want to continue, but the capital is just too hard. It's hard to keep up with since we fund all the schools. If you'd like to help us out, go to Patreon, patreon.com/Bubba Trading. That's patreon.com/Bubba Trading. Also, don't forget to catch the Bubba Show every day from 4 to 5 Eastern at libertytalk.fm. And of course, let's get back to Bubba's Bottom Line and my commentary. Welcome back to Bubba's Bottom Line. Todd Bubba Horowitz with you. And of course, every week I get to vent and give you some of my own personal commentary. And I got to tell you, okay, this anti-Trump and anti-Kavanaugh is just really becoming scary. And it's becoming, as we've heard in the past, of the deep state. This is like right out of deep state, okay? Now, again, I don't know if Dr. Ford's allegations are true or not, okay? They do need to be investigated. They should be investigated because, again, even though it was 30 years ago, obviously, times have changed and there's a lot of things that happen. But I don't think we have to have more evidence to not have the vote. We have to have more evidence not to have Kavanaugh on the bench. From what I know, he's very qualified. But the issue here is that Senator Feinstein had that letter months ago. Why didn't she address it then? This is the problem. This is the deep state things we're having. And why is it that Dr. Ford is not wanting to testify? Now, I understand that she came in under the deadline of that she would testify, but where is it that I believe in the United States of America, you get to confront your accuser, but yet she doesn't want Kavanaugh in the room, and she wants him to testify first. Testify about what? What is his accuser accusing him of? So again, I think to me, there's a lot of issues here, and this is the true separation that we are starting to see. And again, deep state, you gotta believe in some of it. I mean, you just look at some of the things happen. Why wasn't any of this brought up at the questioning? Why is it coming out now? And why is it that if you're going to make this accusation, why wouldn't you want to confront and go for it? But of course, this is a stall tactic that I believe that the left, okay, believes that they're going to take the midterms, okay, which I do not think so, by the way, just a side note. I think that people are liking the economy, and there's not enough of these lunatics, okay, because again, we have the lunatics on the right and we have the lunatics on the left. We have some that are still in the center, which is where everybody should be, and the issues should switch you back and forth. But we have some that are so far left that it's frightening. I don't think there's enough of them. I think they're just the ones that are making the biggest amount of noise, and that takes a lot of the guys and gals that support these groups. And I think this was more of a plan to hold this back so they could kind of stall this vote. Now, I don't think it's going to get stalled. I think this vote is going to go forward. I think that he's going to be confirmed. But look at the stink you put on him for possibly no reason. Now, again, I don't know if there's a reason. I'm not criticizing Dr. Ford for coming forward, because if it's true, she should come forward. But you just have to wonder about the timing. You have to wonder about the testifying. You have to wonder about the stall tactics that are all being taking place here. To me, that reeks of a plan that was set in motion by the far left, saying that that's the only way we could screw up everything and keep them from getting their vote down. And we know that Schumer has made it clear that no matter who goes up there, they're not voting. So if you look at it, you got to wonder, you got to say to yourself, this reeks of a major problem. And of course, everything they have done, the far left, including Booker and the rest of them, should be embarrassed as Americans that they're acting like a bunch of children and trying to manipulate their way to get their way instead of letting the people speak. But that's just one man's opinion. This is Bubba's Bottom Line. Everybody have a great weekend. As always, we enjoy being here. And of course, we're going to give you our 2 selections for this weekend for football. And that will be Arizona Cardinal against the Chicago Bears plus the 6. All right. And our blue plate special will be the San Francisco 49er against Kansas City taking the 7. Everybody have a great weekend. As always, I thank you so much for being here. This is Bubba's Bottom Line. We'll see you for tomorrow's Bubba's Daily Update. And of course, always on the weekend, Bubba's Bottom Line. Have a great weekend, everybody. Thanks so much. We'll see you later.